Good morning, everyone. It's Wednesday, the 10th of June. I am Bosun Amofaye. Welcome, everyone, to today's Frontier Opening Bell. Let me introduce my team of analysts as usual. Ali Khan Sacho, he has a very big day on his hands on the east coast of Kenya. Thank you very much, Ali Khan Sacho, CEO at Frontier Management. Thank you very much. It's good to have you, the rich man, the only rich man on the show, as I say, on a daily basis.
I wish.
Thank you. Then Ayode Jebro is the CEO and a licensed trader at Afrinvest Securities. Afrinvest Securities is one of Nigeria's leading investment bank and securities trading firm registered by the SEC. Ayode, good morning. It's good to have you on the show. Thank you. And also from Lagos, Luke Ofojebe is the team lead equity research at Vetiva Capital Management. Vetiva is also one of Nigeria's largest top investment bank and securities trading firm. Gentlemen, thank you very much. Let's get the show started. We have quite a lot on our hands, but let me take you through Africa's closing market indices, just a snapshot of some of the big names, the big markets on the continent. The Nigerian Stock Exchange was 0.34%. Yesterday, the Cote d'Ivoire's, the BRV and the regional exchange was just a tad of 0.01%. The Egyptian market was down by 0.75%. Kenya was down by 0.5%, and the South Africa GSE followed the rest of the softening across major markets on the continent. Take that away. Let's talk about what's making the headlines this morning before we get to Ali. South Africa's business confidence index is expected out later today. Meantime, north of the continent, Samsung is making an announcement of $48 million over a 5-year period investment in Egypt to produce computer screens. Meantime, the OECD released its latest outlook on the global economy, expecting 6% downside. But if there's a second wave of the virus, that could be 7.6% negative reading. So let's talk about East Africa and get Ali to come in here into the conversation. Yes, the East African communities budget will be out tomorrow. Meantime, all eyes on the Kenya's monetary policy meeting set for later this month, at the end of the month. Ali, coming here, good morning. Welcome to the show.
Morning, and thank you very much, and good to be with all of you this morning. Just to, first of all, touch on the budgets. We have a synchronized budget release once a year amongst all the East African community countries. So tomorrow is that big day. That's when Kenya, Tanzania, Uganda, Burundi, Rwanda will all announce their budgets for the next full year. And obviously, given what we've encountered with COVID, and given the fact that it's very much been a circuit breaker, everyone will be keenly watching to see what are these governments proposing to do in order to balance the books. I think it's going to be a difficult exercise. Most of our countries have had a shutdown. Tanzania is the exception, and therefore the revenue side of the equation is obviously under tremendous pressure. So I think everyone will be watching how they're going to go about that. This is a big day for tomorrow, just to tee people up. Of course, politically, we had the sad announcement yesterday out of Burundi, President Pierre Nkurunziza, who was newly anointed the supreme leader. They just held an election in Burundi, which his favored successor won. Passed away, 55 years old, very fit, a football player. He had a team called Hallelujah Football Club. And the question there is going to be around the political stability after that. And also, it seems that this was a COVID-related illness. So there'll be a lot of interest to see what precisely happens there. Turning to Africa, which you touched on, tomorrow is the PMI. These numbers have been at 20-year lows, so the market's very keen to see whether there's been any rebound or so. I doubt it, because everyone's been locked up, but now they're opening it up. But essentially, that's what the market will be looking at.
If there is anything that the Rwandan political authorities will be watching very closely, is who replaces the late President Nkurunziza. I'm sure President Paul Kagame and his cabinet will be watching the developments in Burundi very closely. They share some common, not too pleasant history, I know, on the East Coast. So I'm sure that's one big story there. But again, let's talk a little bit more later about the Northern African markets. Egypt keeps ringing the bell, keeps making headlines. The FBR, the FDI story, and the currency, interest rates, exchange rate. Ali, give us a few minutes to talk about that. Let's get to talk about Nigeria and West Africa. MTN, the continent's largest telecommunication giant, yesterday announced that its Nigerian commercial paper was overbought by 400%, 50 billion through the book building, 100 billion naira was what was eventually sold. That's a big story. But if you look at MTN also on the Ghana Stock Exchange, the shares was up about 1.75%. On Tuesday, the second trading day, 1.1 million shares. Let's get Ayo Jebo to weigh in on this very quickly for us on the show today. Morning, Ayo.
Morning. And MTN within the telecom space, we know it's the telecom giant and the leader within that particular space, controls over 50% or if not up to 60% of the volume within that space. For the commercial paper, and something interesting that MTN did, I think is part of their retail focus, because if we recall, during the IPO, during the capital raising, the equity capital raising, they were supposed to go for an EIPO that would enable retail investors be part of the company, trying to see how they can bring in their existing subscribers to also invest. So what we saw within the offer period was that they brought the minimum subscription from 5 million that's typically obtainable for commercial paper to 1 million. That also increased the access to a lot of the retail investors that were unable to invest in commercial papers. And the name, you need less story you don't need to talk too much about what they actually do. A lot of people know how they make their money, how the data. When you also want to look at it, this lockdown or COVID-19 pandemic has also favored the telcos. The main reason is that remote working. So for most people that cannot travel have had to also make calls. So we expect that both their voice revenue and data revenue will surge significantly in Q2. So
Ayo, just a quick one. Ayo, do you think that the rate at which this commercial paper came to the market, investors are bullish on this particular company, even though they're looking at a yield curve environment in Nigeria, that they decide to overbuy this particular offer?
I think what is also investors were also very fascinated about that was because of the brand. Because if you look at the risk premium over the sovereign, it's less than 1%. So you can say MTN is almost ranking at par in terms of rating with the FGN. So for investors to still be comfortable to put in, they are sure that though it's coming from a corporate and has its inherent risks, but with that size coming from MTN, investors were still comfortable to put in their money in the company.
Let's add some sugar to whatever is in the teacup that I have here or that Ali has in Nairobi. I'm sure Ali always knows a cup of coffee at this time on the show. So let's add some sugar into that. Let me ask Luke Ofojebe from Vetiver Capital his thoughts about the Dangote Sugar Refinery or takeover of Savannah Sugar, the announcement that came yesterday of this share exchange. How do you see this company moving forward?
I mean, Watson, thank you for your question. But really, that's not surprising because it's something that has actually been consummated over a long period of time. I mean, we saw them early this year when they started consolidating their books with that of Savannah. And the thing is that the deal has actually materialized things before now. So, I mean, going forward, what we are going to be seeing is improved numbers in terms of revenue improving going forward, because what it means is that we'll be seeing additional output from the Savannah plant. But then again, when you look at the overall outlook for the sugar business, it's not that great because globally we are seeing decline in prices, and this is due to the fact that supply is rising at a very fast pace compared to demand. And demand, on the other hand, is actually weakening. And the reason for this is because we are now seeing stronger advocacy for less consumption of sugar. We've seen consumption of sugar decline significantly in North America, in Asia, and also in Europe. And the expectation is that we'll be seeing more of this, because even in India as well, we are also seeing that increasing advocacy for less consumption of sugar. So what this means is that we'll be seeing sugar prices falling significantly. And more so, that can entice smugglers to still go into the business in terms of bringing in refined sugar into Nigeria. That can, in a way, also create strong competition for the likes of Dangote sugar. So overall, the outlook for the sugar business is actually bleak in Nigeria, given that we are already in an era where we'll be seeing falling sugar prices, while production cost stays relatively constant. So I think what's going to be driving it now would be from the talks we've had with management, we are actually seeing like increasing demand from the people in the northern part of Nigeria. So if that demand is strong enough to offset the decline in prices we are seeing, then we might see bottom line improving. But aside this, you still have the COVID-19 pandemic as well. What we are seeing right now is that we are seeing cases of job losses, we are seeing cases of salary cuts. So that means disposable income is very likely going to suffer in 2020. So that can also impact the demand for sugar in the country, and overall it can also dampen Dangote Sugar's earnings, despite the consolidation of Savannah books into its financials.
Okay, great. Just a minute, let's quickly touch on Southern African markets. Let's bring it on. Thank you so much, Luke. Just a few seconds, we'll ask for your outlook on Nigeria's trading day in a few minutes. Ali, let's talk about the South African Business Confidence Index. This is the Africa's most advanced economy and the second largest. But if you look at some of the stories, this business confidence data will be closely watched tomorrow. But again, yesterday, what we saw was the South Africa Sun Exchange raised $3 million for crypto power systems. This is one big story that was on everyone's lip yesterday. I saw it on social media as well. Ali, let's have your thoughts on this.
So this is very innovative. We have not seen this kind of thing before. I think it speaks to the fact that South Africa is trying to get ahead of the entire crypto curve. I mean, previously, the likes of Mauritius and, interestingly, Seychelles were exploring that crypto market, but everybody else, from a regulatory point of view, had been kind of avoiding it. And what has happened with the crypto market? It's crept up predominantly with that very young demographic we were talking about yesterday. I've seen data points which show that crypto trading on the African continent as a percentage of per capita income is probably the highest of anywhere in the world, except places like Venezuela. It's got a lot to do with currency stability. But so I thought this was very interesting. I think it speaks to the fact that the South African regulators, who are typically very conservative and cautious, are getting ahead of the game in this space. So I think we should watch that closely, and also bear in mind the explosion of interest in crypto amongst younger Africans on our continent.
So what's your outlook, very quickly, Ali, on the Business Confidence Index out of South Africa tomorrow? Later today.
So it's been trundling along at multi-year lows. I mean, every time I see any of these indices, they tend to be like at 20-year lows, 25-year lows. So, it would be good to hopefully see a bounce, but I don't think we can have a bounce just yet because they're only now easing the lockdown. So I think we're going to be looking in the rearview mirror with this data point today. I think it will remain very weak. But I think as they open up the economy, we're going to see a recovery in that confidence index going forward.
Interesting. So let's just spend about 1 minute very quickly with back in Nigerian market and West Africa a little bit. Ali, we'll talk about Egypt in about a minute or two very quickly. So, Adeji, when we talk about the Nigerian market, look at the yield curve environment for us on the fixed income. What's your outlook on the current trading week? Today is Wednesday already.
Thanks for that. Today we expect there's a primary market option for Treasury bills, and we expect it to also be significantly oversubscribed. And we feel that the yield environment will remain very low. We've seen that signal from the CBN, and we expect that also on the back of significant maturities that we have continued to have, that have continued to filter into the market, that will continue to increase the demand or the subscription. So amidst limited investment opportunities within the fixed income market, so for most fund managers, PFAs will still want to will still invest in Treasury bills even if the rate goes to 3% for the 1 year bill. But we feel that at the close of the day, rates should still remain within current levels, or we may see a slight, if government is willing to take beyond the amount offered, they may also want to come up a bit on the rates. But we feel that it will be significantly oversubscribed, and investors would still, for some investors, would still prefer to lock in their investment in Treasury bills, in risk-free, in quote, investments, than other forms of investment that comes with its own risk. So by and large, there will continue to be significant oversubscription within the market as we see significant maturities. Currently, what we have in the banking space, banks are rejecting funds. Currently, they reject funds significantly because of what is happening with checking their liquidity ratio. So those funds that a lot of PFAs will not be able to place funds with the banks, those funds will find their way into the Treasury bills market.
Interesting. Perhaps that's part of what we saw with MTN. Of course, that's a good name to put your money on if there's nowhere else to park your liquidity. Okay, let's talk about North Africa very quickly. Ali, let's get back to you. I'm always interested in the Egyptian story. The market gave up its gains yesterday, down about 0.75%. One of the biggest listed company, Mercer Cement, first quarter net profit, 3.3 million Egyptian pounds. Meantime, the Casablanca MESI free float index was down 0.27. The ESG index was down much deeper, about 0.6%. Tunisia Airlines, one of the airlines there, says we're losing about $600 million. Thousands of jobs are at risk within the aviation industry. But that's not the big story. Egypt is the big story. Ali, coming here with this country story, inflation data out this morning, surprisingly, on the downside, 4.7% against expectations of 9%. Foods are very. Go ahead, take it from.
So basically, like you said, that's a 430 basis point divergence from market expectations, mostly food driven, but really, really dramatic. And I think the Egyptian stock market, which I think is down about 20% year to date, one of the laggards in Africa, this is a very bullish sign to me because a lot of money went into the fixed income space. Egypt was paying really handsome double-digit interest rates. The currency was relatively stable. There were billions of dollars parked in there. But I think what this inflation number is signaling to us is that possibly the stock market is now going to look quite cheap, specifically if we get some rate cuts now coming through the economy. So I think that's a very positive step. And what I would say to people is, you know, after those reforms, when they restructured their economy, allowed their currency to devalue, they really very aggressively created a platform for FDI, much more coherent and structured than any other African country you care to mention. And I think that announcement you were talking about earlier about Samsung is a signal in the noise that really Egypt is a premier destination for FDI, it's for international investors. And I think that's one of the big plus points for me in Egypt. You also touched on, I think, Tunisia very exposed to tourism. Of course, that the airline must have suffered terribly because of that. And they must be hoping there's a quick recovery and that they are treated like the Southern Europeans because, of course, they're on the Mediterranean Sea. But for now, I'm not sure what the situation is there. But bullish about Egypt, I must say.
Okay, great. Thank you. Let me just ask Luke very quickly back in West Africa. Look, give us your outlook on the equity side for Nigerian market for the rest of the week, as we talked about with Ayode Jebo a little bit earlier about the fixed income side. What do you see? What was the playbook for the rest of the week from your side at Vertiva?
So, like I said at the start of the week, I expect that we see more positive sentiment at the Nigerian Stock Exchange. And the reason is that oil prices are still holding steady. Brent, for instance, still above $40. And we think that will continue to support trading sentiment over the course of the week. And that was why we saw positive gains on Monday and Tuesday. And we expect similar performance for the rest of the week. However, like I normally say, because right now the strategy for domestic investors is not really to play for the long term. It's more of just taking profits anytime they see significant gains over a short period of time. So we also do not rule out the possibility of profit taking on a number of stocks that we see significant rally over the course of the week. But overall, the outlook is that we continue to see this positive trading sentiment in the market, mainly due to improvements in oil prices.
Okay, well, we're going to wrap up the show, gentlemen, but very quickly, I want about a minute or less from each one of you. One big story that's been making headlines is about the size of Africa's sovereign debt. Some are saying we need a debt relief, whether it's a debt cancellation or debt suspension or debt restructuring. On the sovereign side, Bloomberg reports overnight that this is the next explosion waiting to happen, and the way to avert depression is to move very quickly for nothing less than 3 years debt moratorium. 60 seconds. Ali, what are your thoughts on this?
Yeah, I agree with Bloomberg. I think we've got an explosion ahead of us. We've kicked the can down the road, maybe 6 months, maybe 12 months, maybe 18 months. But this is going to be reminiscent of what happened in Latin America. And it took a Nicholas Brady plan to resolve the matter. I think
don't cry for me, Argentina.
That's right. And how many defaults has Argentina had since then? But Boston, basically, I think a lot of our policymakers are deluded. They're not dealing with this subject. Unfortunately, if you look, we borrowed about $600 billion as a continent. And if you look at the investments that we made on that, with that 600 billion, frankly, we haven't invested well at all. And I think we're going to have to deal with this. This is the elephant in the room. This is the issue we're going to have to deal with. And our policymakers until now are still kind of going with a begging bowl to China, begging here, begging there. They've got to grow up and get smarter, really.
I wish it's going to be a big elephant in the room rather than a bull in a china shop. Okay, so let me ask Ayodeji here.
You're on fire.
Ayodeji, so is this debt, sovereign debt in Africa, a bull in a china shop or a big elephant in the room, or both?
And also just driving it home, you would see even Nigeria, we have even, when we look at we are always focused on the ratio of our total debt as a proportion of GDP. Meanwhile, the GDP is not producing, is not productive, that will be able to generate what will be able to pay back those loans, which by the time you look at our total debt as a proportion of our actual revenue, not even budgeted revenue now, you would see that it's almost close to 100% when you check debt servicing. So this is already moving at an unsustainable rate, and something needs to be done very fast. Yes, I agree that we need to spend more now for us to get out of recession, but it has to be in productive sectors, such that in the near future we'll be able to generate those sectors, will be able to open up cities, open up economies, open up our activities, and we'll be able to, the tax from it will be able to repay back, or the levies from it will be able to repay back those loans. But if we continue at this rate, I'm afraid this may lead to a major crisis in Africa.
Okay, thank you so much, Ayode Jiebo, for your thoughts. Luke, you have about, Luke Ofojeba, you have 30 seconds. Why do you think we can avert this, what has been called a depression in terms of Africa's debt?
I mean, it's something that is not surprising to us. It's likely going to happen because when you look at the countries in sub-Saharan Africa, especially for the ones that are heavily dependent on commodities, like Nigeria and Angola, we also have some others that are also dependent on agricultural commodities. And we started seeing falling prices in a number of these commodities because of a slump in demand, which was due to this COVID-19 pandemic. So a number of them right now, revenue budgeted at the start of the year has been revised, and we are seeing much decline in that expected revenue. So what it means is that a number of them will not actually have capacity to finance their initially raised debts. So the expectation basically is that we will see debt forgiveness in terms of no interest payments this year, and maybe the first half of next year as well. Then going forward, when we see the economy recovering, then a number of them can start honoring the debt obligations. Thank you.
Luke Ofojeba, Team Lead Equity Research at Vertiva Capital Management. Thank you very much for being part of the show this morning. We appreciate your time. Ayode Jiebo, the CEO at Afrinvest Securities and a licensed trader, as well as Ali Khan Sacho, the CEO and founder, Rich Frontiers Management out of Nairobi, Kenya. Thank you, gentlemen. We'll see you again tomorrow. Another big day. Let's have a great day, everyone. Bye for now. I am Boston Omofaye, and I will see you tomorrow.